Hey everybody, Real Estate Ninja here. I hope you're doing well. I want to talk today about real estate cycles, and I'm going to pull up some charts and show them to you. The reason why is because we are in an epic real estate downturn, and I know that's hard to believe for a lot of people, but real estate cycles are very real. This one is actually very big, and I'm going to show you where my mindset was in 2005 when I sold my home, all of my portfolio, about 90% of it, because it's important to understand where we are today so that you can make really good educated decisions tomorrow. Okay. Now, listen, I'm not here to sell you anything. There's no current promotions on the real estate crash course or anything like that because I'm completely swamped with the group coaching calls to bring people into understanding of where we are in their cycle. But I thought this would be a good time to talk about it because we're coming into an election cycle. We're in the election cycle, and it is going to be a really big one because there's a lot of battling, and there's a lot of battling for your votes, quite frankly. And people on both sides are going to try and tempt you, and you need to know where we are in the real estate cycle, the current dollar cycle, and all that kind of stuff to understand what is happening in real estate. Okay, so let me just dive in. I'm going to share my screen, and what we're going to do is we're going to show you a handful of charts. We're going to start right here with the unemployment rate. So, in a nutshell, very easy to understand. When unemployment rises, there are fewer people that have money to buy a house. Okay. And to make home prices worth more tomorrow than they are today, we need people with gainful employment and actually employment that pays them enough to be able to buy a home to sustain the current home price. I hear it all the time. People say, real estate's not going to crash this time. And I go, okay, great. Tell me how that is. Not one person has ever been able to answer that question. Everyone that says, oh, real estate's not going to go down this time. Okay, why? If you can't answer that, and should be the answer, this is the only thing that makes real estate go up. There's actually two things. The belief that real estate will continue to go up, right? Now, I know that sounds crazy, a belief. You can't just wish things into existence. You're right, you can't. So you need that. So you need a positive attitude or a thought process towards the real estate market. Then you need enough people that have such a strong conviction, such a strong, like belief that home prices are going to go up that they actually go out and buy a home. Okay. So what is happening right now is home sales are falling off of a cliff. It is not a healthy market. Actually, inventory is super low. And when I mean inventory, I'm talking about the available homes on the market. Okay. So since there's so few and there's just enough people moving around trying to buy up homes in a little bit of a panic, and that group of people is very small, it keeps the prices a little strong, right? I'm going to get into that part in a second, but let's talk about unemployment. So now I use all these charts we're going to go over today, these three charts, actually four, start around the year 2000, okay? Because the economy, the world changed after 9/11. I want people to understand it's a big deal. After the dot-com crash, coupled with 9/11, a lot of things changed. All right. Monetary policy around the world changed. Money printers started hitting the streets and throwing money at the world, and especially banks. Okay. And interest rates got really low. So look at this unemployment. If you'll notice here, look at this perfect pattern. It was, it was in a low, it was higher in the 90s, but it dropped down and then it popped up, right? It popped up during a recession. Then it dropped down into the early 2000s, and then unemployment popped up during the Great Recession. You say, well, Ninja, this sort of makes sense, right? Check this out. This is why it does make sense, because so many people are saying, well, it's different this time. It's different this time. Okay. This right here, as it came into a low and spiked, this is called an anomaly. All right. What people don't realize is when unemployment's really low, I know this sounds crazy, things get really bad because what happens is as more people are working, they're spending, running the prices of all kinds of things up. Down here was the stock market bubble. Down here was the real estate bubble. And down here was the forming of a everything bubble. And we were seeing bank crisis here, bank crisis here. And actually, most people don't understand this, but the banks were actually in serious crisis right here in 2019. As a matter of fact, the interbank lending rate, the rate at which banks loan money to each other, during 9/11, it spiked to 6%. During the Lehman Brothers crash right here, it spiked to 6.25%. But guess what? In 2019, it spiked to 12.5%. It's because there was a crisis going on in China, coupled with a lot of banks in America that did not trust each other. So look at what we see here again. unemployment at a low. As a matter of fact, unemployment's even lower today or right around this area than here and here. But I'm going to tell you one big change that happened. The government is now counting every part-time job as a full-time job. So if somebody has two part-time jobs, the government actually counts it as two jobs. All right, so now let's dive into the next chart. Check this out. The federal funds effective rate. The Fed funds rate is the rate that it loans money out to the banks. And actually, it directly, in a lot of times, it actually uh, has to deal with all interest rates because eventually, if the banks are getting interest rates low, they can offer mortgages lower, right? If money for them to borrow from the Fed costs more, they can actually, they will actually charge more, right? And they're always going to keep that little bit above the Fed funds rate because it's called the margin, their profit margin. So now look at this. As unemployment, like I showed you right around 2000 was at a low, rates were going up, right? Well, they always go up so much to where the public can't bear it. And they're like, companies can't borrow money to keep business going, to expand business. People can't pull out mortgages, credit card debt's getting high, interest. All these things get high, and the Fed breaks for a while. And this is called what I call maximum pain, maximum pain, maximum pain, maximum pain until the economy breaks. Now, you'll notice right here, this is November of 2000, and the official recession didn't start till March of 2001. This is why, because economic data started coming in right here that was bad. So the Federal Reserve knew they had broke the backbone of the American people. Now look at this, December of 2000. Let's go back here. What was happening in December of 2000? Well, here we go. December of 2000 is the first point at which you saw unemployment almost at its bottom, and then it started to tick up. Check this out. Boom, right there from December 2000 to here. Well, let's go do this. Let's go for here. What was happening in November of 2007? Let's go back to the Fed funds rate. November of 2007, and I'm doing this live. I didn't prep any of this, honestly. November of 2007, well, look at that. The Fed funds rate was already starting to drop because they already had the data. See, the Federal Reserve gets the information in before you do. They're seeing it in real time. It's like me going to my bookkeeper and saying, we're having a rough month. We're not getting a lot of sales in. And my bookkeeper goes, what are you talking about? We just got all this money. And I said, that was last month's sales. I'm looking at this month. Totally different, right? So it's the difference between getting the data right now and you being in the public and having to wait 3 months at minimum for a quarterly report. Heaven forbid waiting a year for an annual report. This is the difference, okay? So the Federal Reserve starts dropping rates right before a crash, okay? Now, let's do this. If you look at the Fed funds rate, again, we bottom down here, and this right here is when I started buying real estate. Whoop, right there. Actually, it was a little bit before, sorry. It was spring of 2001. And I was buying real estate like crazy, hand over fist, because I knew that the Federal Reserve, as they dropped rates, home prices would start to go up. And so it was important that but it takes a long time for those home prices to go up. So I was doing on my rentals, refinance, cashing out, buying more properties vigorously, right? Well, I didn't start selling them till mid 2005. Here we go. The glorious time right here. If you want to know why, is because when the Fed had bottomed rates, people were buying up homes hand over fist, and they were even getting crazier in this time because the exact same thing that's happening now happened back then, but on a smaller scale. You see, as lending costs got more expensive going on this uphill grind, people panicked into the market because all the people like myself were making money down here, refinancing, cash out refinances, lowering rates, cash flow is getting more incredible. My bank accounts were filling up, right? But as this started, a panic grew. Home sales fell off of a cliff, right? And I'm going to get into those in just a second, the actual price of sales, prices of homes in comparison to home sales. But as I started to liquidate, I saw all this panic, and I had to deal with multiple years from mid 2005 till here. I was the crazy person for selling my homes. Lost my friends. Everyone said I was a bummer to be around. You get the point. But look at this. Once again, right before a recession was announced, there was a dropping of rates. Well, now, wait a minute. Check this out, because I told you back here, This was an anomaly, right? This was an absolute anomaly. The world shut down. Look at, there's a recession right here. The world shut down. Crazy. But look at what happened. Remember when I told you the banks were in a crisis? Things were not going well in 2019. Look at what happened with the federal funds rate. It was going up, 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 maximum pain, maximum pain, maximum pain, just like maximum pain over here and maximum pain over here. Look at what happened. Prior to the world shutting down in June of 2019, the Federal Reserve started aggressively dropping rates. Why would that be? Did the Federal Reserve know that something was going on? They absolutely did. I was living through this in real time. So you see that then, right beforehand in November, which something had already come out of China, they flattened out for a second. Why? Because it was the calm before the storm and then a plummeting of rates. Now, look at this. This is what I want you to understand. This rate rise right from here up to here. And just so you know, the reason why the Fed tells you this is because inflation. But just know inflation happened because of these rates right here and insane money supply, money printing. So right here, you've got this. And now look at where we're at. Maximum pain, maximum pain, maximum pain. You're going to see a repeat of this housing crisis. And right here, there was actually a housing crisis, which most people failed to understand because sales stopped. Home prices dipped just a little bit, not much, but sales stopped. It was enough for me to walk in and start buying up homes, home after home after home after home. I bought 14 properties in a matter of, what is it, a year and a half, 2 years? And that was a lot for me. I wasn't the biggest, obviously, but I didn't have a lot of friends that were really successful around me to mentor me. And so when this happened, and then this crash, I promised I would never, ever not be ready for it again. Now, check this out. Check this out. You want to compare to 2008? This is total debt balance of household debt. Look at what happened as we were going up into 2008. Debt was getting worse and worse. Homeowners were paying more for insurance. They were paying more for property taxes for the price of the home. They were paying more in credit cards because they were holding bigger balances. And then look, after the Great Recession, this is what happened. It came down. Well, now look at where we are. So to say that this is worse than 2008 is an understatement. But check this out. Let's look at the average sale price of homes. Look at what it did right here when we peaked in quarter one of 2007. And I told you, I started selling in mid 2005, right? And you go, Ninja, you missed it. Average sales prices of homes kept rising and you sold way down here. You lost money. No, I didn't. You want to know why? Because I had a couple straggle homes in 2006 that I had such a hard time getting rid of. I only made around $3,000 in profit because what happened was during this time, homes were flooding the markets, starting to be flooding the markets, and it was becoming harder and harder to sell. And what happened is only the homes in the lowest price, and I didn't have homes in a lower end, not lower end is an insult, but I was investing in one of the most expensive regions in the country, right? So it was already falling off a cliff before the lower price homes, and that's what's happening right now. Go to any state in the nation and look at the $1 million plus homes, especially 1.2 million, and you will see they're sitting on the market for an insane amount of time, or they're having to drop their prices between 10 and 30%. Okay, well the average sale price of homes, the lower priced homes, they weren't affected because even as rates go up as much, the price didn't go up as much as a more expensive home, right? But look at this. This is what I wanted to point you out to. See, I told you that we didn't see home prices drop a ton when I started buying, right? They topped right here, they came down just a bit, but inventory was increasing and days on market were extending, so I was able to pick up some amazing deals. Here we go. This peak leading into this. Look at what we got right now. This rise, and if you think of Newton's law of relativity, right? Every action has an equal and opposite reaction, right? What goes up must come down. Okay. It came up, right? Nice long distance. Then it came down. Look at where we're at now and look at this drop on a percentage basis. This right here is this moment right here. This is this right here. And you are about to see this part of the chart right over here look way worse than this. Remember, a lot of people lost their homes. A lot of people lost money right here. And this was a big deal. So are you going to be part of it or not? You need to start getting prepared. Get out of debt, keep your credit score high, get it higher, and start making plans. Start looking at starting an LLC and doing things legally, getting all of your ducks in a row now to take advantage of the greatest housing crash. I hope this helped you. Put down your comments down below. It helped me learn to give you better content, and we'll see you another time. That being said, the economic ninja has got to figure out how to turn off Zoom. See you guys.